Thank you, sir. I'm sure after listening to you, especially your insights on lending and borrowing, your thoughts on equitable returns, timely and fair application of laws, and having a system of credit, I think it gives us a lot of hope. And a lot of us in the audience would want to have our questions answered from the governor himself. So, as I had mentioned earlier, may I request all those who have questions to kindly pass it on to our volunteers so that we can begin with the session.
Okay, questions. Some are statements, some are questions. So I'll leave the statements. Banks should handhold small enterprise apart from merely giving credit. That's an interesting point. And some of our banks and some of our financial institutions like NABARD do in fact do that. They handhold because for small enterprises, especially for relatively unsophisticated new entrepreneurs, handholding is part of the process of making them credit worthy. But typically, handholding requires a lot of investment of time, and banks may not have the kind of return from lending that would warrant that handholding. So undoubtedly our public sector institutions which have some public value from doing that, do more of it. But also one could think of institutions like social venture capital or social private equity, which will perform this kind of service and perhaps take more of an equity stake in these entities that they're hand-holding. After all, if you think about venture capital is really about hand-holding the innovative entrepreneur, though the expectation of venture capital is going to make billions and billions. But one can think of that scale down and think of how one can have entities that would invest time and effort in hand-holding small operators so that they can run reasonable firms. Question is, you talked about forbearance, flexibility, etc. How can banks inculcate values in common citizens to ensure that credits are repaid on time? I think most citizens of this country treat debt as a solemn commitment and repay. And that was precisely my point, that for the most part our credit culture is pretty good. The real problem comes when large entities who know they can use the system to avoid repayment try and do that. And again, I'm not saying that all large entities do that. I'm talking about a small fraction, but that small fraction is enough to spoil or to muddy the waters for the others, which is why our credit spreads are so wide. A 5.7 percentage point credit spread is pretty large. And can we bring that down in order to reduce the cost of credit? That's something we need to think about. Okay. All these reforms take a long time. What do lenders need to do in the present system? I think we're working on it. I think the joint lending forum we have set up, the government is thinking of expanding the tribunals and working on that. We have, in a couple of years, 2-3 years, we will have a fairly robust bankruptcy code. The government, again, is working on that. All these things will help improve the quality of the credit system. In the short run, I think the single biggest factors in making loan losses lower will be first growth. That if growth increases, it will lift a lot of ships. But second, specific interventions to make the projects that are stalled come back on track. The government is again greatly engaged in this. This will deal with many of the problems in terms of stressed assets. But we also need to deal with the problem of incentives, which is why we need to also focus on the problem of delays in the legal system and see how the judiciary, which has recognized its own need to reduce the quantity and delays in appeals, I think they have to also take action. Okay, there is a question about education loans. All these loans come at 10, 11%, but education loans are at 13%. Well, I think that we do need to take a close look at education loans. Of course, education loans are extremely important, and they're necessary in a country where increasingly we're charging for higher education. But there are two or three things we have to be a little careful about. One, that sometimes the provider of education is targeting the education loan and is essentially providing education which doesn't necessarily get you a good livelihood, which allows you to repay the loan. This is an enormous problem in the United States, but it's not an insignificant problem in this country. That is, there are courses being offered at a high price, which will not necessarily generate the appropriate income for the people taking those courses to repay the loans they've taken to pay for those courses. So we do need to pay attention to the fact that education loans themselves can become a burden, an unsustainable burden, if we're not careful. So that is something that we need to pay attention to. Second, perhaps because of these reasons, we are seeing non-performing assets in the education loan segment also increasing, especially in the last couple of years. That has picked up. We need to take a closer look at this, understand whether it's because people aren't getting jobs, or again the incentive to repay has come down and people are not repaying for other reasons. But this is something that we have to pay attention to, and it's because of the high level of non-performing assets in this sector that perhaps banks are charging higher rates of interest. Again, if we could find ways to ensure that people would repay, I think those rates would come down substantially. I'm being very wary about, in fact, I'm being very careful about not taking any questions on monetary policy, inflation, etc. There's a very good reason for it. The monetary policy meeting, and I should say the monetary policy statement is due on December 2nd. And 2 weeks before that, we are in a blackout period where we don't talk about monetary policy. So I'm avoiding all those questions. I can talk about credit for all, by the way, I should tell you about one thing that I am also worried about, which is these schemes that are now proliferating through email and so on. And let me tell all of you, if you get an email from me saying that I have suddenly discovered 20 crores that belongs to you, or that we, that's perhaps less plausible than we, the Reserve Bank, did a lottery and then decided that you were the lucky recipient of the 20 crores, except that in order to send you the 20 crores, I need some stamp duty, which you have to send me first, of only rupees 20,000. If you get an email like that, junk it, okay? It's not real. But but the one of the problems in this modern world is, as we've got technology reducing the cost of access, we've also got scammers who are getting more and more innovative. One of the scams we uncovered recently was one where they send you a credit card. Credit card given by the Reserve Bank of India. So it has Reserve Bank of India on it with our stamp. And they tell you use it, and there's free money that again the Reserve Bank of India is giving you. You use it, and it works. The first time you can withdraw 5,000. I have to figure out how that happened, but you can spend it on something, and then they say, okay, now that you're satisfied it works, send us 20 lakhs. And you send them the 20 lakhs. So all these have a common feature. It involves you basically sending them money in return for you getting a wonderful deal. Okay. Now, Milton Friedman used to always say there's no such thing as a free lunch. And you must remember that in these interactions. Nobody gives you money freely. Nobody finds you the lucky winner of a lottery and gives you, 5 crores, 10 crores just out of the goodness of their heart. So if I'm promising to do that to you, please recognize that that's a fake. I mean, more or less, more generally, use common sense. If I'm going to give you 5 crores, why do I need you to send me 20,000 into my account? I might as well deduct 20,000 from the 5 crores and send you, 4 crores, 99 lakhs, 80,000 rupees, right? So please use some common sense and tell all your friends. I think this is important because I'm sure people in this room will not succumb to these kinds of mails, but too many do. And I often get phone calls in my office asking when the money is coming.
Credit rating agencies, you have anything to say?
There is a question about credit rating agencies. Clearly the world over, credit rating agencies came under a certain amount of cloud before the financial crisis, for their behavior before the financial crisis. I guess the question really is, should we pay more attention to credit rating agencies in this country and the quality of the ratings? My guess is, as time passes and we have more sort of ability to discern between the credit rating agencies and the quality of their credit ratings, I think those will be made public by private institutions, and people will be able to discriminate between the quality of different credit rating agencies. I think the broader point is that one should be careful about treating every credit rating as equivalent to every other credit rating. There are differences among rating agencies, and one must be conscious about that. These are some very detailed questions on the process I talked about. They're technical questions, and I'm sure if we get time to talk later, I'd be happy to answer some of those technical questions. Now, here's an interesting question about getting black money back to India. And what are the correct solutions? Now, clearly one of the big unknowns is how much black money lies outside. And I think there are widely differing estimates of how much black money lies outside. But apart from the issue of going after that black money and trying to catch the people who've taken it outside, there's also the question of how can we incentivize ordinary upper middle class people from taking recourse to black money, right? And that's something we need to pay a lot of attention to. So let's cut it off at the source. Let's stop people from utilizing outside channels. How do we do that? Well, we've already taken one step towards that, which is have reasonable tax rates. Remember, there was a time we used to have tax rates of 91, 90, in fact 102% when you took wealth tax into account. Now, why would anybody declare income if you were going to tax them at 102%, right? So we've come down to maybe 30% plus a surcharge. That's a very healthy tax rate. If you're not willing to pay that as tax, well, basically you don't value the benefits of citizenship, right? So I think tax rates have been brought down. That is one. The second is we have to make it harder. While the positive incentive is reduced tax rates, we should also make the penalties or the difficulty of hiding much harder. So which means that require something like a PAN number or a Aadhaar number for a variety of transactions so that you don't have the ability to take the money outside the formal system. So if a lot of transactions are vetted and there is data mining going on by the tax authorities, which has sort of been expanded, if that goes on to check where all you've put your money and whether the whole picture is consistent with the picture you're declaring, that again will make it much harder to conceal. And you know, there are suggestions that we get often that we have to, that we continue examining and trying to see how we can take action. For example, some people have argued that large purchases of any kind, but especially of things like gold and jewelry, should be accompanied by giving your tax ID or Aadhaar number. These are all useful suggestions. As we go forward, I am sure that a number of them will be implemented. So with a low incentive, as well as a high possibility of getting caught, I think the amount of black money in the system will come down over time. And more transactions which today almost necessitate the use of black money will become much more white. I think many of you would argue that in a number of places in India, the amount of unaccounted money that goes into, say, housing transactions has come down over time. And that is because we have better systems in place. But my hope is, as we improve these systems, more and more money will come into the formal system. The final point, of course, is financial inclusion. If we have access to the financial system much more easily available across the country, less money will go outside the formal system, and that's something that the government and the Reserve Bank are focused on. There's a question about the currency. Is for strengthening the currency, is Make in India sufficient, or buy Indian by Indians also needed? Okay, I guess this is asking whether we have to restart the Swadeshi movement in order to strengthen our currency. Now, you know, my guess is that we have come to a point where we are a relatively open economy. Not the most open economy in the world, but by most counts, we are an open economy. There are benefits to imports that, you know, for example, it brings outside competition to keep our domestic producers in check. It sometimes provides quality goods which we can't get domestically. So there are benefits to imports, and one should not completely deny those benefits. At the same time, imports sometimes are necessary for exports. You may have to import a subsystem which is not made in the country in order to make the whole system, which you can then export. For example, some of our cars. I would be surprised if every one of the cars we export contains 100% domestically manufactured items. I'm sure it contains imports. So imports may be necessary even for exports. In fact, take our biggest exporting industry. What do you think is our biggest exporting industry? Gems and jewelry? Oil products, right? We have refineries which basically import oil and then export refined products. They're adding value, right? So that's a huge industry which relies tremendously on imports. So I'm not sure we need a campaign of don't import. Let's erect the import barriers that we used to have in the 70s and the 80s. Remember, we erected those barriers. What happened to our exports? They didn't pick up. And we found that eventually we got into a debt crisis. So I'm not sure erecting barriers to buying foreign goods is necessarily a good thing. I would rather that we focused on greater efficiency in making our own goods. If we can make goods more efficiently, we will find export markets for them. We will find people willing to buy. And to make goods more efficiently, we need to improve our domestic infrastructure, our domestic system of credit, which is what the lecture was about, our regulations, rules and regulations to make it easier for people to do business. And finally, our education system to make people much more qualified and able to undertake the kinds of tasks that the modern economy requires. So I would focus on those rather than saying you must buy Indian.
Okay. Views on priority sector lending and economic development?
Yeah. Priority sector lending, and there's a statement about private sector banks. I'm not quite sure, but I think it's asking whether private sector banks are fully cooperative on doing that. In fact, interestingly, on some aspects of priority sector lending, some private banks do better than public sector banks in achieving those targets. So I wouldn't say it's either one or the other. Now, we have been examining priority sector norms. We're still trying to get consensus internally before we look for external consensus. But the key question is, why do we need them? And the answer is we need them probably for two reasons. One, we need to reach the excluded, the weaker sections of society, the small and marginal farmer who haven't got access to credit. This is a little bit of a nudge, if you will, to get people to lend to those areas. And the second reason is for areas that are deemed of national importance, that we need this particular area now because this is an issue which the country needs to deal with by pushing more flow of credit into that area. Now, given these, the question is, how can we most effectively achieve priority sector objectives? And sometimes there is a sense that each and every bank should do each and everything because otherwise it's not participating in this most important venture. And economists would say, well, maybe, but don't treat it like a punishment. Treat it like something which is important for the country, which means that if some banks want to do more of something and they have better capabilities of doing it, why not let them do more of it? And let them get some benefit from doing more of it. If somebody can lend to small and marginal farmers in a way that is more effective, let them lend more to small and marginal farmers, but get some benefit. And let somebody else who can't lend to small and marginal farmers, but can lend to micro and medium-sized enterprises, small and medium-sized enterprises, let them lend more in that area. So one of the things we're trying to do is find a way to allow banks to pick the area of expertise a little more, to go more into areas they have more capability of lending to, and give them some credit for it. Don't change the overall norm, but give people more credit for overachieving norms, such that they can underachieve in areas where they're not so competent. Achieve the overall norm for the system. If you want 18% lending to agriculture, let's achieve 18% lending to agriculture. But everyone need not lend 18% to agriculture. Maybe the foreign banks can lend more to small and medium enterprises, while the banks with a big rural presence can lend more to agriculture. So that is what we're trying to think of, even while revisiting the various norms to understand how they fit in with the way the economy has changed. So those changes will hopefully be announced in a little time. The question is, when small borrowers are expected to repay, why can't large borrowers also be expected to repay? And I don't want to ascribe moral values to the large borrower. I'm just saying that when the system enables you to avoid repayment by simply getting stays from here, there, and everywhere, it's incentive compatible not to repay. For the small borrower, he doesn't have a choice. So it may not be that the small borrower, though I believe all of us are moral and so on, but if the small borrower was also allowed the choice to avoid repayment, perhaps he or she might. And one of the dangers of repeated loan waivers is that they give small borrowers the hope that they can avoid repayment by waiting for the waiver, and that's something that I think we've commented on repeatedly. So perhaps one shouldn't ascribe moral sense here, but really the system, and which is what my talk was about. How can we change the system to make it more forceful of repayment, because that is in everybody's interest, including, let me emphasize, the large borrower, because the large borrower will be hurt by the fact that people anticipate they won't get repaid and therefore will charge a much higher risk premium. Okay, this is an important question. How will reforms, it says this reform, I presume reforms to credit, help economically backward people, okay? And again, I want to emphasize that the difficulty of economic thinking is understanding how an action which seems contrary to what its objective is can actually help. Okay, so let me emphasize that, and perhaps I don't need to make this point to this very intelligent audience, but making recovery easier actually makes it easier to get credit, right? That should be obvious. If the bank knows it will get repaid, it will be willing to make loans. Why is it that the money lender is willing to make loans where the public sector bank is not willing to make loans? The money lender knows he can come to your door, harass you, and perhaps do worse to you if you don't repay. So he doesn't care whether you have a credit history, he doesn't care whether you have a job, he just cares that he can come to your house and harass you, and you will repay when you're harassed enough. In the extreme, the mafia, their collateral is not any physical object, their collateral is your body, right? So the broader point is, as I said, during history we have become much more lenient in terms of credit, but today a bank will lend to you against your house because it knows that it can repossess the house if you fail to pay. And therefore you get cheap housing credit. That is why your housing credit is not the same as your student loan credit, where the only thing as a student loan you're offering is your willingness to pay in the longer run when you make a good salary. Similarly, I told you that power producers today get the marginal loan at 13.7%. So the way we can bring down the cost of credit is by making the recovery system more efficient. Therefore, your poor borrower can now borrow more easily, because for him anyway, to some extent, if we can make the recovery system more efficient, he can also get access to credit, which he doesn't have in the first place. Today, nobody will lend to him except the saukar. If the public sector bank starts lending to him, his cost of credit will go down tremendously. So access is important. Now, what will he use credit for? And this is where I want to make a different point. Most people are looking to lend to the poor only against what they call income generating loans. Okay? He has to promise me that he's going to set up a sewing machine or a little shop or something like that, only then will I lend to him. But I think we have to move a little away from this mindset that only income generating loans are a good thing. What if he says, I want to pay my son's school fees, but the school fees all come in a lump in July when I don't have the money. If I pay those school fees, I won't be able to eat for a few months, but over time I will get income and I'll be able to live better then. So if he takes a loan to pay the school fee, but then his income is then used to repay the loan, and he eats during this time reasonably and he feeds his children, is that a bad thing? And I would argue that looks like a consumption loan, but it's actually an income generating loan because it's invested in his kids who are going to do better over time. But even take that aside, supposing he has a fracture and he wants to take a loan in order to go get that fracture healed, after which he'll be able to work. But if he can't get the loan and get the fracture healed, he's done for. That's again a consumption loan. Would we be fair in refusing him the consumption loan? So my sense is we should be a little more open to a variety of loans. Yes, if he wants to borrow a lot to finance his daughter's marriage, well, we're all a little worried about that because he may go perpetually into debt. But, you know, I'm sure we can even think of reasons why that might be a reasonable thing. But the point is broadly, we should be more open to borrowing so long as we have a reasonable sense that he's not over borrowing way beyond his potential means to repay. How does the point I made work for family businesses? I'm not sure it's any different. Whether the promoter is a public firm or a family business, I think the point about trying to do an efficient sharing of the losses in bad times and not holding up repayment pertains to both. I think it's relevant to both. Today, loans like home loans and car loans are not affordable to the middle class. What should we do about it? You know, the real question is, what does affordability mean, right? So affordability is always relative to incomes. So the immediate answer is we have to increase incomes. If we don't have higher incomes, you're not going to be able to afford cars and houses. Now that is why we need growth. We need growth to generate higher incomes, which then go to these things. But I think the implicit in the question is interest rates are too high. And then you have to ask the question, what is a high interest rate, right? And a high interest rate is not, people keep looking at nominal interest rates and say interest rate is too high. Now, any interest rate contains 2 or 3 parts to it. One is the risk-free rate that you have to pay the saver to get him to part with his money. The second is the risk premium that you have to pay the lender, because the lender is taking a risk on you, you're going to default some of the time, and therefore he won't get his money back, he needs a return for that. The third is a term premium, which is in a sense most often a compensation for inflation. Because there's inflation, because money when you repay is going to be worth less than money that you took today, there's a compensation, right? And I would argue when you're saying it's too costly, you're either saying the risk-free rate is too costly, too high, or you're saying the risk premium is too high, or you're saying the premium for inflation is too high. And I have been saying again and again, I think the real problem in this country is the premium for inflation is too high because we've had high inflation. But also I've argued in this lecture that the risk premium is high for certain kinds of borrowers, not for the households, because you're not paying a big premium. 10% when the policy rate is 8% is not a big premium. Remember that 10% also includes inflation and other things. But I'm arguing that for the power producer, the amount he has to pay is really a lot, close to 14%. And there, the risk premium is a big part of the additional amount he has to pay. We need to bring that down also. Forbearance versus flexibility, and this is a writer after my own heart. We always avoid and delay the solutions. So why do we do that, basically? And the answer is tempting to delay, right? If I don't have to deal with the problems, my successor will deal with the problems. Why not let him or her pick up the problems and deal with them? So every time I put my hand into a hornet's nest, I risk getting it totally, bitten. So why not stay clear? Let the hornets buzz around. Recognize that's an issue. I need to get rid of it, but wait, and also put my head into the ground and hope when I bring it out, it'll have gone. These are common responses, but you have to have a very strong sense that either the problem will still be around when you take your head out of the ground, in which case you might as well act on it now, or you have to sense that it will grow much bigger if you don't deal with it now. And I think that what I've been trying to say in this lecture is these problems basically do both. Financial stress tends to be around, doesn't disappear, and it gets worse. And therefore, forbearance is probably the wrong idea. But working on it, giving people the tools to deal with it, is much more important and is something we have to do. No. Okay. I mean, one question is about the quality of current institutions, and essentially it seems to be a question about public sector banks. That is, how do we remedy the public sector banks? Let me start first by defending the public sector banks in what they've done. That is that at a time when we needed large infrastructure investments, the public sector banks went into those infrastructure investments and took risks that others weren't willing to take. And clearly assets have been created, which hopefully as we unclog the system, those assets will come on track and be very, very functional. So I wouldn't take a one-sided view of what they've done. Now, can public sector banks be reformed to improve the quality of both the actions as well as the public service that they provide? And I think the answer there has to be yes. And the government has been thinking about different ways that it can improve the quality and the functioning of the public sector banks. I think over time you will see some actions to reform them. Already there has been some reform in the way public sector bank chairmen are selected, but going forward I think we will see an extension perhaps in the terms for which they are appointed, some reforms of bank boards, of the governance structure. All these things I think will be on the table in terms of contemplation. But let me emphasize once again, let us not diminish the kind of work that public sector bankers have done and taint them all with the same brush because of a few cases of malfeasance. That they are performing a very important role in this country, and we should find ways to make the public sector work more efficiently because they are responsible for significant amounts of money in the system. Thank you. I think that's about the questions that I can answer.
I profusely thank the audience for their active participation and our chief guest for responding. I now invite Director IRMA to deliver a vote of thanks.
Now that was the most inspiring and thought-provoking talk we have had today from Professor Raghuram Rajan. On behalf of IRMA and on my own behalf, I extend my sincere thanks to Professor Raghuram Rajan, Governor, Reserve Bank of India, for having accepted our invitation to deliver the third Dr. Verghese Kurien Memorial Lecture and leaving us with all these thought-provoking ideas. And also for answering a whole bunch of questions which we ourselves I found a bit difficult to decipher, but carefully and studiously going through each question and trying to answer them. Thank you very much. I also thank Ms. Nirmala Kurien again for her gracious presence. The success and conduct of this program owes much to the guidance of Shri Deep Joshi, our chairman, IRMA, Shri Nandakumar ji, chairman, NDDB, who is also a member of our governing body, other members of the governing body, staff and faculty and staff of IRMA, staff of NDDB who have been wonderful when it was decided that our audience for Professor Raghuram Rajan is going to be too large to be accommodated in the IRMA auditorium, and we moved to the NDDB auditorium. I thank all of them and thank the audience for being such a patient and wonderful audience and passing on those chits and notes very patiently and waiting for the answers patiently. Thank you all very much. We conclude this lecture.